Hey, what's up, guys? Shaka, Daniel here. Give it a couple seconds for you guys to come in before we officially kick it off. Okay, what's up, guys? Shaka, Daniel here, and I just wanted to come and give you guys this video. Trying to do one every week at least. So, and today's topic is a one that a lot of people may disagree on. Hold on, let me send this out. A lot of people would disagree on this topic right here, and it's whether trading cryptocurrencies is gambling or not. Um, and the reason some people may say that it's gambling because of the risk factor, um, there's definitely a risk factor within trading. There's I would say on a basic level, there's about a 50-50 chance that you uh, will win or lose, right? Because the market can either do two things. It can only go up or it can only go down. All right. So that alone would tell you that trading cryptocurrencies, you have a 50-50 chance. Now, if you're if you have totally no idea about trading at all whatsoever, you still would have a 50-50 chance technically, but I think just because of your inexperience and ignorance of the market, I would say that you probably have a slightly higher chance of losing, maybe about a 60% chance of losing. Now, in the Forex market, only 10% of traders are profitable winning traders on a consistent basis. Now, that doesn't mean that you can't trade. There's not people that trade and they make money here and there, but as far as on a consistent basis, only 10% of the market walks away consistently a winner. Now, trading, originally, I'm a poker player. The way I found out about Bitcoin, let's just get into that real quick. The way I found out about Bitcoin at first was through online poker. I used to play a lot of online poker. I wanted to go professional. And the same way I share information with people about Bitcoin, I put a lot of my friends onto playing online poker. And a lot of them still play to this day. So I taught a lot of people how to play online poker. I'm pretty good at online poker, but it's just really time consuming. It's like trading, but to me it's more so like day trading, because when you're at the computer, you're going to be there for long periods of time. All right, you're going to be sitting in front of your computer. These tournaments can run 13 hours straight, and you get a little 15-minute break in between here and there. Like, it's not really conducive. It's not really good for the healthy lifestyle. So playing poker is very comparable to day trading. And if you guys follow my channel, you know that I am not a day trader. I do trade cryptocurrencies, yes, but by no means am I a day trader. I don't sit in front of my computer all day and look at charts and overanalyze a market that I choose, or I don't sit there and look at cryptocurrencies 1 through 100 and try to squeeze out an opportunity, because in my experience and speaking to other people, this is a losing strategy. Believe it or not, guys, there are people out there, brokerage firms, there are people out there who create losing strategies. There are people out there that create losing strategies on purpose. right? And because the allure of trading, everyone knows that it's very possible for you to make a lot of money trading, right? But if it can be set up so that you never get the right information that you need, you will be stuck in the same rat race, you know? So trading is very comparable to poker in the sense, well, it can be compared to day trading in the sense that it takes up a lot of time, but it also can be compared to trading in the sense that poker isn't like any other game in the casino. Poker has been declared by California state law as a game of skill, like chess. Yes, there is a luck factor to poker, a small luck factor. Uh, the professionals, a lot of professionals like Johnny Chan, and they calculate it as about maybe Phil Gordon, Phil Ivey, people like that. They calculate it at maybe about 7% luck within poker, right? Now, it does have its times where you can do everything right. You can have the perfect setup. You can be reading your opponent. You can basically know what your opponent has in their hand. You can read, because you're not really, you're to guess what another player has in their hand. You're reading the board and you're assessing their actions towards the board, and then you're narrowing it down to a small group of hands that they possibly could have. Good poker players are now trying to narrow it down to a group of cards that he might have. Like, okay, he might have pocket queens. He might have a set of threes. He might have ace king. Good poker players aren't really trying to narrow it down to one hand, because it is very hard to do that, and you can't do that consistently. All right. So poker is very much so a game of skill. There is a small luck factor to do with it, but poker is a game of skill. The same with trading cryptocurrencies. All right. Like I said in a couple videos ago, I already had a proven strategy that I used for trading Forex. But when I started to trade cryptocurrencies, I wanted to switch it because cryptocurrencies moved so fast and the profits were so big that I thought maybe a day trading style would be better. I quickly realized and quickly adjusted back to the strategy that I was using for Forex. And it works perfectly. It works flawlessly, actually. Not flawlessly, that's a big statement, but it works very well. My win percentage is very, very good. And this is because trading is a game of skill. Is there luck to it? Yeah, sometimes. Sometimes there can be a level of luck to it. And you do have to have nerves of steel sometimes to hold on to a trade until the market goes back into your direction. Right? That means that doesn't mean you want to hold on to a terrible trade and just pray. But you might hold on to a trade because you're so confident in your technical analysis and you've done this so many times, and your analysis is saying that the market is going to go down, even though it might temporarily pull against you. All right. So this is why I personally think that trading is not gambling. Trading does have Trayvon is funny. Let's trading does have a level of luck to it and somewhat of gambling. But if you have a strategy, especially a longer term strategy, and your technical analysis is good, and you don't trade with emotions, and you're not a fanboy. I know people hate when I say that, but if you're a fanboy, you're going to hold on to your position way longer than you should, and then you're going to just create bags for yourself. That's why it's not good to be a fanboy. You can believe in the technology, but being a fanboy as far as trading and investing will make you become a losing trader or investor. All right. Now let's look at some calls that I made, and just to see if this is gambling. Now, uh, granted, everybody can't read the market the same. So if you can't really read, if you don't really know price action, and your technical analysis isn't that good, and you're just dependent on indicators, then that's gambling. When you see these people when they have 1,500 uh, indicators on the screen, this is gambling, because you're letting a robot tell you when it's time or not time to get into a market. All right. And what the robot is programmed to do is a form of technical analysis, which you should be doing. The only technical analysis that I use is my eyes and my brain. I use one indicator. I've used moving averages, and I use moving averages for different things. And I've been using moving averages since Forex. Everybody has different numbers and different, but I have a certain set of things that I do with moving averages. I barely use Fibonacci levels. I hardly do, because Fibonacci's are just advanced support and resistance levels. And it's kind of like somewhat of a cop out to me. It's somewhat of a cop out of support and resistance within an up or down move, a single up or down move. These Fibonacci levels won't back test really well, because if you back test those same levels, the market might not react the same way that they're reacting as it's in this specific uptrend. This is why I don't use indicators. I might have the moving averages on my screen, but I'm only looking for very specific things and to reference to it. I don't look at it as an entry or an exit point. I just use it as a confirmation to give me the nod. I use it as like a friend to say, "Yep, you did the right thing, Shaka." Because after I make my move, the moving averages will indicate a certain thing, and then that will give me an extra level of confirmation. Right? But I've already made my move way before the moving averages have anything to do with anything. All right. So let's get into a screen share, gentlemen and ladies, because I know there's some ladies out there. I've definitely had some conversations with a couple of different crypto ladies, and they're growing. They're out there. They're growing, and I'll shout out to them. So let's just look at Ethereum here, guys. And like I said, let's get the big picture. Like I always say, let's get the big picture. Let's get the big picture, because the big picture is going to give you possibilities. All right. The big picture is going to give you what's capable, what can happen. All right. My last video I called out, I put that Ethereum, in my opinion, is going to end up in between these two green lines. Actually, this green line was a little higher. Well, yeah. Well, between 800 and 600,000 Satoshis. All right. This is not the ultimate level, but this is where I think we're going to start seeing some signs of reversal, or at least a couple days of consolidation, maybe a long period of consolidation around between 800,000 and 600,000 Satoshis. All right. Now, I called this move up here. Don't mind these lines. These lines this is what I was doing with one of my students the other night. And I was just giving them an example of this green arrow right here is where people were trying to catch falling nice. This arrow right here. People were trying to catch this falling market of Ethereum, because Ethereum has a very, very strong following. People have a lot of faith in Ethereum, and so that's why people kind of call it like it's kind of cultish. Some people say it's kind of culty, but a lot of people were trying to catch this market here. That's why we went from a sell-off to a tombstone, almost a perfect tombstone doji. All right. But it closed off in the tombstone doji because the sell pressure was still so strong that the minority of people still trying to catch this falling knife didn't have enough buy pressure. So the market pushed off. All along here, look, this is people trying to catch this falling knife and trying to, I don't want to say manipulate the market, but trying really hard because of faith in Vitalik and the Ethereum team to push this market back up here. Right? So people were trying to catch this falling knife here, hoping that it would go back up and retest resistance, but it didn't. Sell pressure was strong. Consolidation. Well, it ranged here and then it consolidated here. This range and consolidation is people trying and adding on huge bags to their position instead of letting the market really level out and show signs that it can push back. All right. Break down. When you see the market do this right here, guys, be very wary of buying in. All right. Not all the time. I'm not even going to give away all that in this video. But when you see the market do this in certain situations, guys, be careful because the market has a tendency of liking to fill back out these wicks. It's like saying, okay, let's see how strong that level is. This level isn't that strong. It broke down. And you see every time it broke down and pulled back up, it eventually came back down and filled out these wicks. Even though wicks can be looked at as two different situations. They can be looked at as signs that the market will go back to that area eventually, or it can be looked at as strong rejection. All right. There are signs to tell which is which. This is like, these are all, I'm explaining this to you guys like this because I'm just trying to get the point across that this is not gambling, gentlemen. This is not gambling. Is it risky? Yes. Is it gambling? No, not by any means. This is not gambling at all, gentlemen. All right, look. People trying to catch this falling knife in hopes of it going back up. Look, people bought up here. People bought. Well, it was, even though it was back here, people bought at these levels. People bought at these levels. Now they're holding bags. Now they are holding bags. And let me say this: it's nothing wrong with in my trading plan and agenda. I don't plan on holding bags. I'm not holding any bags. But if you want to hold bags because you have faith in it for the long term, by all means do that. It's nothing wrong with that. All right. But I'm just not into doing that. I personally am not into doing that. All right. So let's look at Steam, because Steam is another call that I made the other day, and not because of, not solely because of, oh, the inflation rate is going down and blah blah blah, because that's very temporary. Steam is going to sell, most likely Steam is going to sell back off. It might not sell back off all the way back down here, but it definitely going to sell back off. As a matter of fact, it might very well sell back off back down here, because all of this news is temporary. And Steam, after the rate of Steam goes down, that's still not going to really change anything in Steam. All right. That's not going to bring mass adoption to Steam and driving the price through the roof. All right. These things are very temporary spike booms. Like when Factom gets a Series 7, blah, 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 and it booms up to a quick 15-20%. All right. Does it hold up there at that 15-20% that it gained? No, because in cryptocurrency, all of this stuff is very, very temporary. All right. The only thing in cryptocurrency that has been like certain so far is Bitcoin price will continue to go up, and was temporarily certain was that the DAO, when it was going good, when it was going good, was increasing, was adding lots of value to Ethereum and was increasing the price. And probably if the DAO would have went well, if it would have went well, I think that Ethereum would be in a very different place, and the price of Ethereum would probably be like $40, maybe 30, $40 maybe. All right. DAO tokens will probably be worth like something like that. Who knows? No, but that didn't work out. So we got that major pullback, and now we're here. And don't try to catch that falling knife, gentlemen. So yeah, I gave out this trade signal the other day. It was around this candle. This almost doji. It's pretty much a doge. Got double doge, double spinning top, spin top dojis. All right. This was signifying that the market was not only confused, but that the sell pressure was not that strong. All right. But see, this is more of an advanced move. And the reason that people let's quickly digress. Not too much though. The reason that people lose a lot in cryptocurrency is one big thing. Well, two big things. One, they don't take the time to actually learn, or they don't put in the necessary things that they need to learn. They don't want to invest in themselves, whether it be time, getting a mentor, or a little bit of both, or whatever. And then two, they get in on the middle of runs. First of all, you don't want to get in on the middle of any run in any market, because what can happen? It can pull back against you violently. All right. Now, cryptocurrencies, the reason that it attracted a lot of speculators is because people were hearing about 1,000% increases in a day, 2,000% increases, and it's like 5x's on your money and stuff like that. That's unheard of in other markets. All right. But if the market moves up 5 times in one day and you jump in the middle, right, and it pulls back, that means you're going to possibly lose up to 2.5 times your money on a pullback, possibly. Whatever you put in, you can lose all of that on a pullback very easily. You don't want to get in on the middle of runs. You want to be able to read price action and see when the market will do this. Now, no matter how good your price, hold on, I'm gonna get to you, Trayvon. I'm gonna get to all. I'm gonna start looking at the comment box right now. Let me just get this thought out before I forget. What I was gonna say? Oh yeah, you want to be able to for your technical analysis to be able to spot moves before it gets deep into its move. I don't really want to give away too much, so I'm trying to figure out a way to say it. You want to be able to spot a move before it gets deep into its move. All right. Indicators lag, gentlemen. If you didn't know that, let me be the first to tell you, because someone told me, and let me pass it on to you. Someone told me a long time ago, and let me tell you, indicators lag. Indicators lag by up to 4 to 6 days. Indicators lag. Not all of them, but none of them, as far as I know, are like second for second with the market. They lag. Moving averages lag. It's a lagging indicator. So if you If your move is solely dependent on a lagging indicator, your move will lag. All right. So that's why technical analysis and price action is king. All right. So let's look at some of the comments. Richie, Richie Rich, one of my favorite crypto commenting guys. What's up, man? Amanda B, hot crypto lady. Yes, yes, she is. Mm, I'm like the rational investor. I need to have a little bit of everything. Blah, blah, blah. See, the rational investor, he trades with a lot of advanced, more a lot more what they would call advanced patterns, like double tops, heads and shoulders, double heads and shoulders, um, bat bat patterns. You know, I think he trades gauntly as well. He trades a lot more indicator type of styles. And with him doing that, getting a little piece of everything, he's just not he's just not just shooting a shotgun and doing a spread method and just it's a method to his madness. All right, I'm pretty sure there's a method to his madness, and I'm pretty sure he's back tested and came up with a strategy that is a lot more complex than what it just sounds by, oh, get a little bit of everything. It's way more complex than that, because I doubt that he's trading all those advanced patterns consistently without, and then would go to something like, oh, let me just grab a little bit of every coin. That doesn't even make sense. So I'm pretty sure that there's a huge method to his madness, and he's definitely a smart guy. He definitely can trade. But the one thing I will say about his style and all of those well, not his style, but those, because he's a very smart guy, but those advanced patterns makes trading seem so confusing. That's why people think that trading is like, they think that they can't trade, and they don't want to trade because they think of all these advanced patterns and this and that, and then they start to think that they need to be good at math, and there's a lot that goes into that. Agreed on Steam, almost no liquidity. Yeah. So that's why you don't want to put big amounts of money into markets that aren't liquid, at least $1 million a day, or like, like a couple $100,000 a day, because you won't be able to get your money out without somebody dumping off and moving the price. Let's see what you say about XMR. All right, let's see what's going on with Monero, Trey. Monero Monero is showing signs that the sell pressure is dying. And mind you, let me say this again: trade at your own risk. I'm not telling you any of this information I'm saying is not financial advice. I'm not telling you guys to uh, take any of these trades or anything like that. Trade at your own risk. Do your own homework. Do your own technical analysis. But from me quickly scanning over this, I don't want to look at it too long. The sell pressure. Wait, let's see. Actually, no. There's looking like there is a bit more sell pressure, possibly back down, possibly back into here. So if there is some more sell pressure within Monero, there's some more. There's another level of support in here. All right, a medium level of support. But you guys know what I say about medium levels of support in cryptocurrency. Rational investor keeps a little of everything when he's in profit, so they are basically free coins. Okay, yeah, yeah. I used to do that too. I used to do that too. I used to what I first started off doing. First started off, I switched my style for at least for cryptocurrency. I switched it to day trading, and what I would do is I would trade Ethereum and keep the extra Ethereum because at that point I was very bullish on Ethereum. But I stopped doing all of that, and I only want Bitcoins because I had an epiphany, and I said, "What am I doing this for? What did I start doing this for? Bitcoins. Let's not get too caught up in the rabbit hole." Some cryptocurrencies I invest in and I buy them and I hold them. But as far as like trading, I'm trading to get more Bitcoins. Yeah, he's grabbing coins at the bottom and his blah, blah, blah. Okay. Yep. Okay, so yeah, so if he's grabbing, if like I said, because I'm not really watching his style like that because I have my own style. And that's another thing while we're on that. There is something called information overload. You can overload on information, guys. Trying to pick up pieces from everybody's style, it will confuse you. It will hurt your trading. Perfect example: Eddie Alvarez and Conor McGregor had a fight. You know what a lot of people said made Eddie Alvarez lose? Started to train new combinations like 3 months before he fought Conor. Even if there are holes in your combination, you want to tighten up what you know. You don't want to just constantly add new, because when you add something new, you have to get a rhythm with it. Then you have to get better at it. Then you have to master it, and you just don't skip those steps. So there's something as information overload. That's why I don't look online. I'm not looking at other cryptocurrency traders' styles to pick up from their style because I have my own. Okay, yeah. Yeah, I only trade supply and resistance price action. That's what you posted. That's what the money's at, okay? Throw on my 1334. Honestly, Trey, I use like I said, I use moving averages. I don't use them all the time. I mean, I don't use them all the time, and I don't use those numbers. Um, and I don't really use them for entry and exit. I know I was on your video the other day, and I saw how you were using them, and you definitely have, as far as the bullish and bearish crossing, you whoever told you that, they understand moving averages. It's a little bit more to it, but they definitely understand that. So they're not leading you down the wrong path with the bullish and the bearish crossing. I don't know where they get those numbers from, but like I said, my numbers aren't gold. Those numbers aren't gold. It's what you feel comfortable with. Haha, it's not a back technique, Trey. Where do you pick that one up? That one is called the bullish and the bearish crossing, Richie Rich. That's a common moving average. That's what people use when they put on moving averages. They're looking for, you can use moving averages for three things. One of them is the bullish and the bearish crossing. When the faster time frame crosses below the slower, that's a bearish crossing. When the uh, faster time frame crosses above from underneath, that's a bullish crossing. So crossing downward is bearish, crossing upward is bullish. That's how it's used. It's also used for two more things, and the two more things I think are very very powerful. The bullish and the bearish crossing, that's what, like I said, what's called a lagging indicator. Mm, and what what am I looking at to tell sell pressure? I do not use those type of I don't use those type of graphs on the bottom of my charts because I use technical analysis. I use technical analysis, and I use something that they call trend trading. All right. When you trend trade, you already have a set direction in mind, and you're looking for price action to give you reason to have that bias. I don't. The less things you have on your charts, guys, I'm telling you, the more, well, at least me, the more I'm successful I am. I can't have all those things on my chart. It's just a headache. I don't need it. Did I mention Factum? Nah, Factum is at a reload zone, but I saw an article out there that's gonna create some FUD. Is Factum at a huge resistant level? So novice traders that only trade news, and first, don't do that, guys. Don't only trade news. This is cryptocurrency. Those A lot of those articles are planted, even in bigger markets like forex and all that stuff. Those markets, though, a lot of those stories are planted. So it's definitely the same way in cryptocurrency. Yeah, I was basically asking what you thought of it. Trey. Like I said, the you have the right idea when, as far as the crossing, you have the right idea when it comes to the crossing. When the 13 crosses the 34 from underneath, that's a bullish crossing. That is a indicator that the market is in an uptrend. Will it continue in an uptrend? No, that's not how that works. It's just an indicator that it was in a bullish uptrend. That's why I said that these things are lagging indicators. So once you figure out, um, and I like your channel, by the way, Trey. You're funny. You crack me up. Uh, once you figure out the other parts of the moving averages, it's gonna help your trade. It's gonna help you when you're in your trading journey. Yeah, I mean, like I said, the 1334. Those, I don't know. I just don't know where who taught you or something you said like that, but I don't know where he got those numbers. I'm assuming that those are somewhat of fib numbers or close to fib numbers, but I don't really know how he got those numbers. But I use two different numbers, and in certain cases, when the market looks like a certain thing, I use four moving averages. And like I said, if you figure out the other two things that moving averages can be used for, it'll help your trading. Yes, please, guys, simplify. Yeah, no doubt, no doubt. Simplify your trading, gentlemen. Simplify your trading. Simplify your trading. When I trade, I do one-on-one trainings with students, right? When I train these guys, okay, let me. My computer's about to die. I don't feel like getting up and get the charger, so let me just read a quick email from one of my students to you guys. All right, the way that I train my students, the first day that I train them, they're already picking up on it. By the second session, they're already able to apply the things that I teach them, and they're already possibly in positions to make back a good percentage of the money that they paid me for the training. So I would show you guys on my screen, but I don't know if I can blur this guy's information out, and I don't want to test that. So I'm going to read it off of my phone. All right, let's get back. So I'm going to read it off of my phone. By the way, my email is chasethatcoin@gmail.com. Let's see if I can find this. Okay. He sent me this the other day. This is one of my more recent students. He said Factum is at a super strong support level. Mind you, this guy is already calling me and taking the information, emailing me and giving me his technical analysis. All right. This is how simple I make it for people to pick up on and to begin trading. He says Factum is at a super strong support level. Bullish, a piercing pattern action yesterday. I am planning to sell 10K waves, 10,000 of his wave position, and get into Factum. All right. On my first session with him, while I was teaching him, he was trading waves. Waves went up. But since he didn't have the full training, he didn't know how to get out, and he didn't know why to get out. So the market pulled back on him, and we see where waves is today. So now he's I'm planning on selling. See, look, my computer's dying. We're going to wrap this up soon, guys, because I don't feel like getting up and getting this wire. Plan on selling 10K of my waves and getting into Factum. Thoughts. He asked me what my thought was. I don't tell people which direction to trade in. I just remind them of the training that I taught them, and I remind them what you're trying to look for to shape your bias. Thank you once again for the second Steam profit. Now, like I said, I don't tell people when to trade or not, but the way I train people makes it so easy that he picked up on 2 Steam trades. All right. I'm pretty sure I'll make back my profit before the final session. His final session is on Wednesday. This was days ago. I'm pretty sure I'm going to get an email, or on Wednesday when I talk to him, he'll say he'll make back 100% of his profit and he's ready to go on and continue with his trading journey. And if he needs me, he can email me and I'll be there to help him. All right, guys. So if you're interested in one-on-one trainings, contact me at chasethatcoin@gmail.com. Or you could just contact me and say hi. I respond to those, and I talk to people, and I tell them I appreciate them watching my channel from there as well. If you'd like to donate, go to the About section for this channel. I have a list of addresses for different cryptocurrencies there that I accept. I have a PayPal there. Yes. Oh, yeah. Follow me on Twitter at chasethatcoin. Yeah, and just be on the lookout for more of my content and for the channel to keep growing and getting better. If you haven't subscribed yet, I hope I gave you a bunch of reasons to subscribe today. Excuse me. Sorry, guys. I hope I gave you a bunch of reasons to subscribe today, and look forward to seeing you in the future. Keep chasing those coins, gentlemen.